Good afternoon, one and all. Joining this webinar today with us, Law Society Bookkeeping Compliance. It's a 1-hour CPD accredited across Ontario, British Columbia, New Brunswick, and Alberta. We have already shared the link for attendance here. Jeff has shared the link for attendance, and she's also going to be sharing the details as to the title. If you want to take a screenshot of this, please go ahead and take the screenshot. And to claim the credits, please log into your respective Law Society portal, and you can claim 1 hour of CPD credits. It's 1 hour of professionalism CPD credits, as uLaw only delivers professional CPD, not other one. So yeah, the topic, as I already mentioned, is Law Society Bookkeeping Compliance. I know there's a lot of tension in this room right now when I mention Law Society Bookkeeping Compliance. So it's something which is very natural, but if you see there's one line below that says, should it take 10 minutes or 3 hours to maintain this? So I can straight away tell you that it's definitely going to be somewhere between that time, but it totally depends on how clean you maintain the records, how disciplined you are in terms of adding data or maintaining data into whichever platform or whichever method of accounting you have been following. Could be manual data entry, could be, let's say, just a simple spreadsheet on your computer, or could be using a program like uLaw. But whichever is the method that you're using, end of the day, there are some minute details that you will have to probably address, and you will have to make sure that you're recording the details very in a very disciplined manner. So that's what we're going to see, how long it's going to take you and what are the details that you're having to maintain in the records, and how would you do that. And there are certain, like every other webinar, we do have a set agenda for this one as well. Definitely trust as a top priority here, but not all legal practitioners have a trust account. So keeping them in mind, we also have the general, because Law Society compliance also needs general ledgers, journals, and other general accounting related documents. So we are going to thoroughly go through them today and see whatever, like I said, whatever is your method of accounting, see how it works. So starting off with the top two documents, trust and the general ledger, what goes into it, what takes it to maintain them, and irrespective of the method, how do you maintain them? So there are certain set of documents that are mandatory, that are required on a regular basis for you to generate or maintain as part of your document management for Law Society compliances. And so the order starts this way, which is trust and general ledgers, two top ledgers, followed by 4 journals, which is receivable journals and payments or disbursements journal. How do we maintain it? Again, what goes into them? The details of the client, details of the transactions, the date, like I said, even the minute detail of maintaining the transaction number. So we're going to see how it is going to enhance and make your practice seem much easier, especially when it comes to Law Society audits, and you're going to be on a, let's say, on a spot audit. And I know this beginning of the year, there's always this little bit of tension around, like I already mentioned. So try to ease them out by following at least a few things that we're talking today. That is the reason I actually scheduled this webinar to beginning of the year, so that we are all able to address the needs right on the day one almost. And see what are the documents that you need to maintain other than, just journals and ledgers and reconciliations. And talking about reconciliation, that is something we are all focusing month on month, I believe. At least that is one thing I hear a lot of them focusing on. So trust and general reconciliation is very important, irrespective of whether you do transactions in trust or not. If you have a trust account open, I don't know how many of you know this, if you have a trust account open, you are at least recommended to do a $0 balance reconciliation, even if you don't have any balance in it. So if you're maintaining a trust account, make sure to do a trust reconciliation as well as general on time to time. A lot of them focus on trust, sometimes not general that much. And, it so happens that general is also part of Law Society bookkeeping compliance. So making sure that we're going to see how this process can be simplified, and other documents, other jurisdictional documents that we're also going to see, like Form 9A, which is again very common, where these days people don't go into bank and deposit a check to transfer from trust to general, or literally move money, in banks, but people just do it online, where, you just do a bank transfer or an electronic fund transfer from trust to general. Then Ontario jurisdiction actually demands you to download a Form 9A, which is electronic trust transfer acquisition form, while for the trust to general transfer. And we're also going to see, along with it, other compliance documents, deposit slips, etc. So far we've had a glimpse of what is trust and general ledgers. I'm of course going to drill down into the information, but on the agenda, top starts with trust and general ledgers and the 4 journals, receivables and disbursement journals respectively. And trust and general again puts down to 4. So you have 6 documents already there, and the 2 reconciliation, which is 8. That is 2 reconciliation documents, which is trust and the general, which will bring it to 8 documents so far, followed by the Form 9E and other compliance documents like fee books, deposit slips, and other compliances, which will bring it to around 11 to 12 documents on a monthly basis. So how much time do you all really spend on this? I mean, I'm really curious to know. Maybe you can put it on the chat. I would look at it in the end of the time. But it should technically not take you more than, if you say ideal time would be 30 minutes, for 30 minutes to 1 hour, even if you have an average of 30 transactions per month in just trust put together. And so it should not take you more than 30 minutes to 1 hour, like I said, for one bank account. This is even if you have a voluminous transaction, like I said. So 1 minute per transaction, does that count it? Any which way. We'll come to it when we are looking into the trust reconciliations. Now, to make it simpler, yes, there are a lot of benefits with using an accounting software, a legal accounting software to be precise, because that not only helps you to do the accounting or record the transactions, but it also gives you documents that you need, that we were just talking about, the document management that you will be doing on a regular basis, on a monthly, quarterly, annual basis. So we're going to be talking about benefits of using a legal accounting software, of course, like uLaw, because that's technically what I know. So I'm going to be walking you through that. I hope all of you are ready. And here we are going to be talking about the general ledger and the trust ledger. So to summarize what we were talking about in the last 10 minutes, I hope all of you are able to hear me. If there are any questions, I request you all to, put it on the chat. Viewer number 20, you say I have no audio. I request you to probably turn on your computer audio or your phone audio. There is a phone audio coordinates that I've provided here. Steph, I request you to please help them. Viewer number 20, if you can get on the chat and help them. I've also entered the chat. I've also entered the phone coordinates again here on the chat. Request you to please dial in so that you can hear me clearly. I hope all of you are otherwise able to hear me. Even if one of you can come and Steph, please help me here. Okay, thank you so much. Awesome. So yeah, the title of the webinar is Law Society Bookkeeping Compliance. It's accredited for 1 hour of CPD credits. We just finished discussing the agenda, so straight diving into the first line item that we saw there, which was trust and general ledger. Before that, what are the accounting systems that you're all using? What kind of accounting system are you all using, and what does it take to maintain the documents that we just discussed? As we all know that how this accounting system evolved with the time or with the age, from a manual data entry on a book to, a simple one entry, or it's not a double entry. So let's say initially it was a single entry, and then it was made double entry. Then it slowly evolved into maintaining on a spreadsheet, and then moved on to general accounting. Then came into picture with the legal accounting software, because legal accounting handles both trust and general, where you will be guided right into trust for the retainers, for any trust deposits, and the general for any client payments or any other deposits into general. So like you see, there are several kinds of accounting systems, and I'm sure you should all be using one of the most recent and the best for your practice, which will enable you to record the transactions, number of transactions that you have, whether you maintain these records yourself or you have someone else to do it, like, your assistant, your bookkeeper, could be, your accountant. Just make sure that you're keeping Law Society in mind and making all these transactions, whichever method that you're using. And I think end of the day, it only matters to you that sorry, the screen just moved. So end of the day, it just matters about what goes into that particular system, whether you have recorded the transactions from day one, whether you have recorded the transactions without missing any details such as date, amount, who paid you, the method of payment. These are like smallest of the details that could go a long way, because when you are reconciling or when you're pulling up the reports, these kind of information that you are noting down or that you are recording somewhere will make a big difference or a huge difference when it comes to operating your practice, and ensuring that all your records that you need to generate as part of the regular basis, let's say P-book or journals, give you the exact details that goes into these. So you will have to, at some point in time, decide what is the type of system. First of all, that is the major basic decision that you will have to make. What is the type of system you're all using? So when you fix on the type of system you're using, I'm sure not anyone is anymore doing a manual data entry, but if you are, I've posted a list of advantages and disadvantages here. It's very simple that manual data entry is definitely simple and inexpensive, cheaper, but it's such a time consuming, and you don't get different ledgers and sub-ledgers while you're just simply doing a manual data entry. Whereas when compared to today's system, which is the legal accounting software, you get tons of documents and, ledgers and journals as you keep adding the information in there. So as you keep progressing with your calculations, they're all automated, posted into the respective journals and ledgers, produces even financial reports to you. That is one thing I really like about today's software, where, you will have to just add information at one end of the system, and you really don't know how you can get into how it gets into the annual reports or gets into the, let's say, the reports you download for at least annual report filing or your taxes filing or your year-end financials, etc. So it is definitely, yes, little expensive than doing it yourself on a spreadsheet or a manual data entry, but it definitely makes a huge difference to your practice. Like I said, it enhances and takes it into the next level. So first of all, find the model that suits you and your time and your practice, and decide on the method of system or the type of system that you're using, and then you will be able to arrive into the specific documents that we are looking for, or rather Law Society is looking for. So like I already mentioned on the agenda, there are a few top documents that we are looking at. One of them is ledgers. So what kind of ledgers are these? Straight away, trust and general ledger. So what does these do? Like you see an example sitting in here on the screen. Trust and general ledger does record all the transactions that you're bringing into the respective client's account. So these are definitely client's trust and client's general ledger. And it could be specifically for an account, for a specific matter. You could drill it down to the client, or you can drill it down to a matter. Let's say, for example, Kirby has two matters. There's one small claims, there's one landlord-tenant board. You will be able to address to the respective matters and see what was the receipt that the client gave you or that came into your trust, with other trust receipts, and what was the disbursement, what was the balance on the day as of August 30th. If you are looking at the screen here, at the bottom, you are able to see client's trust ledger on the left-hand side, where it starts off with the date, and then you have a particulars column where you know what is the description, and then whether it was a receipt or a disbursement, and then what is the balance as on end of the day. And when you come into the second line item on August 31st, since the receipt of $40,000 was dispersed to the client, it was probably a mortgage file. The mortgage came in, which was added as a receipt and trust receipt, of course, and then it was eventually dispersed as a trust disbursement or a payout of trust, which is clearly recorded here on the ledgers with the date, the explanations, the amount, and the balance, and whether it was a debit or a credit. So that is the level of document that Law Society wants to see when they are performing an audit, or when they are looking into your documents to see what is the transaction, what kind of transaction took place on this date, whether it matches with your bank statements, whether this money actually came in, actually went out. There are a whole lot of things that goes behind this ledger, but in the front of it, or in the front page, this is exactly what they want to look at. This is going to bring a huge difference, and it makes a big difference when you are adding in such minute details. If you see as the invoice number, if you're transferring money. Let's take the second example here, Peter Piper. So for Peter Piper, there is some money that has come into his trust account as a retainer on July the 5th. So you have recorded it as a retainer, and the $565 on July the 14th, the work was probably completed and the money was moved from trust to general. And if you see on the July the 14th, there's a $565 transfer to general, and there's this tiny invoice number beside it that says 002. Why should there be an invoice number? Why can I not just transfer the $565 just bluntly? But this the ledger actually captures even the minute details such as the invoice number if you have added one, because we want to see if there are a couple of invoices for Peter Piper, for which invoice did you actually move the money from trust to the general. That is exactly what is captured on a ledger, like you all see here. And on the right-hand side, if you see, there's a general ledger. Again, date is common between both trust and general. Particulars or explanation or description, whatever you can say, is again common between the both. In general, when you come into general, there's one additional column, actually a couple of additional columns, of which one of it is expense on behalf of the client. Now, where does this come to use? When, especially if you're dispersing something on behalf of the client and you're adding, or when you're raising an invoice, the invoice has a separate legal fee portion and there is a separate disbursement portion. So this particular expense on behalf of the client that you all see here on the right-hand side, client's general ledger, gets recorded and shown here as if there was some money that you have spent on behalf of the client using your general account. That's it, as simple as that. And then you raise an invoice, which is what you see in the fees and the HST column. If there is HST, if there is no HST, it will be 0. And then what the client owes is the balance. And on July 22nd, the client has paid for this invoice, which again you've recorded against this invoice. So the particulars is showing the invoice number over here. Okay, so that is about client's general ledger. The one below is also having a very similar example. So summarizing what ledgers show you guys, every transaction that you record may be any receipt or a disbursement, that is any payment into trust or payment out of trust, payment into general or payment out of general, will be recorded in one of these two journals, and into ledgers, and each of these ledgers also have a running balance day by day. So which is at least date by date. If there's nothing that happened between July 2nd and July 22nd, there's nothing, you will not see anything in between. So which is clearly understood that there was money that came in on July 2nd was taken out on the July 22nd, as simple as that. So now you all know why recording such information is very important, as it goes into the ledgers. But even further drilling down into these are the journals. So when you take journals, we've so far seen the first two documents, which is trust and the general ledger. But drilling down further are the journals, like I said, which are records of a single type of activity. It could either be receipts journal or a disbursement journal, and it could either be from the trust or the general. Hence, you are left with 4 journals instead of just 2 journals, because in the ledger, you saw both trust and general separate, and you saw both receipts and disbursements under one ledger respectively. But when you go to journal, it further gets classified into 2 each under trust and general respectively, and you see that journals are going to have much more minute information or much more drill down information, such as the method of payment, the source of funds, and what date you have received it, etc. So when you take method of payment, why is it so important? Why it could be any method of payment, but Law Society wants to see what exactly, I mean, what if you have just said, I have dispersed it to the client, but it could have not have happened. But when there is a method of payment, and when you have actually entered the saying bank draft, you are obliged to use, or you're required to use the reference numbers there. You have whether used a check, enter the check number. If you have used a bank draft, use the bank draft numbers. Likewise for email transfer or anything else. So the idea behind journal is a little more detailed version of what exactly happened, what was the type of activity, whether it was a receipt or a disbursement, are both maintained for both trust and general respectively. So these journals record again, like I said, the date is common and the explanation is common, like which is particulars, but an amount is also common, like you see. But received from, who have you received it from, the method of payment, and the purpose of the funds, like you see in the receipts, what is the purpose, whether it is a retainer or whether it was a mortgage deposit or whether it was a, let's say maybe if it is a SAB case, you you probably have a contingency come in, so or a settlement payment come in. What is the kind of money that you're getting into trust? That is why specifically if you take uLaw, since I'm talking on behalf of you here, so just an example, if you take uLaw, you will have to, there is a place where you have to mention what is this type of deposit into trust. So these following samples that you see here from the Law Society demonstrates how a trust and a general receipt and disbursement journals respectively should look like. I mean, even missing one piece of information is like missing something in the puzzle, right? Like it goes missing, it cannot be found, or it cannot be formed, or it cannot be completed rather. So that is how much importance I would probably recommend all of you to give to these transactions that you're recording into the respective, probably into your respective methods of accounting, right? Yeah. So far we've seen 6 documents. To recap quickly, 2 of the ledgers, the trust and the general ledger, and 4 journals, which is again, trust receipt journal, trust disbursement journal, general receipt journal, and general disbursement journals respectively. And we also saw what kind of information goes into these ledgers and journals. And moving ahead with the next 2 set of documents, which is reconciliation documents, again classifying further into trust reconciliation and general reconciliation. Now the method of reconciling is very much similar to trust in general, but what goes into it is more important, understanding how a trust is reconciled, and how you can keep it straightforward and making sure if the balances are matching for you to bring up the reconciliation when compared to the bank statement. First of all, the procedure is nothing but, demonstrating set of transactions as per your bank statement and matching it with your, whatever is your accounting method or system that you're using, and ensuring all the outstanding, which is even checks or deposits, both have been captured. And the bank error, if it is a trust account, is also going to be, addressed here. And while you start off, it is very important for you, like I said, the reconciliation could be as simple as 10 minutes. It could be as difficult as 3 hours. I have myself done it for less than 30 minutes and little more than 3 hours sometimes. Why is that so? So some tips that I would like to give here. We all know that recording the transactions on a timely manner makes it easier for you to reconcile. But the dates that you add these transactions, like I know it's a minute, again, it's a very small detail that we are looking into, but how much the date of activity affects this particular process, because the bank date and your transaction date should be at least closer, and it should definitely, if it's not, then you will have to adjust the transaction date to the bank date in your program or in the system that you're using, and making sure all the outstanding deposits and withdrawals are, you have a list of them. Time to time you make a list, and you have captured that in the system that you're using. So that way, your balance as per the bank statement, as you see on the right hand side demonstration, minus the outstanding checks, any checks that you've issued but has not yet gone out of your bank account. So the actual balance as per the bank statement minus the outstanding, because someday it will definitely get reduced, but it is not yet reduced. Plus the outstanding deposit could be that you received a check for $250 as on 31st of August, but you have not submitted, 10th of, is that what, right? Yeah, 10th of August or 31st of August, but you have not submitted it as on 1st of September. And this is very, very simple. When you're doing a 31st August 2010 reconciliation, you will not be able to identify this $250 in your system because you have not recorded it. You have not yet, as in it's in the system. It's the other way around, sorry. It's in the system, but you have not deposited the check physically in your bank yet. So it will not appear in your bank statement. So it's an outstanding deposit. You need to walk into your bank and put it in the next day, or it is probably the difference like you see here that you have deposited it on the 31st, but as on 31st of August, it is still not showing up in your bank statement. Maybe it takes 1 or 2 days to show up as per, it depends on bank to bank. Some banks are very spontaneous. Some banks needs 24 hours to 48 hours to show all the deposits. So that plus the bank error, if you have any plus or minus the bank error. Bank errors could be negative, bank errors could be positive, and that would bring you to the reconciled mixed trust balance, which is the balance as per your bank statement. So this is what you have as end of the day and end of the month rather. And when you do this, the other steps are much, much easier. So remember, there are 4 parts to this activity: recording your bank statements, balance, recording your outstanding checks, recording your outstanding checks also includes, of course, recording your outstanding deposits, and recording your client's trust listing. If you're having a trust account, you need to make sure all your client who has balance in trust is clearly recorded. Now, this is where legal practice management system plays an important role, because you really don't have to add all this client's trust listing or enter all this client's trust listing by yourself. The program does it for you. So you only have to enter the first couple of steps on the top, which is adding the bank balances and adding the outstanding deposits or reducing the outstanding checks. But the third and the fourth, which is the client trust listing and the trust comparison, is automated if you're using a program like uLaw or any legal accounting system where, they're simply just with one click button. When you reconcile, it clearly shows you or brings up the trust comparison and the trust listing automatically if you have recorded them right. Okay, so now that is about trust, reconciliation. In a very similar manner, you will have to do the general reconciliation also, except that you won't have to record any bank errors in the general. Bank errors, what is bank errors? Many of them actually ask me what is bank error in a second. Let me just tell you. Bank error is nothing but when you are being charged, or you are being, probably by mistake charged anything by the bank. Like, let's say you're doing a email transfer or an electronic fund transfer and your bank charges you. They should actually charge you in your general account, but instead they have charged your trust account. That is an error. So you will have to record it, that you only notice it in the next month for the previous month. So it turns out to be a bank error. You cannot record it as an expense from trust. So, making sure that you show it as a bank error is very important. And even more important is to rectify it immediately, so that, when you're being audited or when you're submitting your reconciliation statement to Law Society, especially for 31st December, try and be error-free so that it doesn't kind of ring an alarm in the Law Society record. So, making sure that your errors are all addressed from time to time is very important. If you're fixing an error within the same month, then there's no need to show error anywhere in the book. All right. So that was so far 8 documents we've seen. So starting with 2 ledgers, which is trust and general ledger, 4 journals, which is trust receipt journal, trust disbursement journal, general receipt journal, general disbursement journal, and the next one that we are talking about here is the we just spoke about rather was the trust reconciliation and the general reconciliation, and we're left with other jurisdictional documents and other compliance documents like fee book, deposit slips, and maybe electronic fund transfers, client ID verification, cash receipts, etc. So, so far, I hope all of you have no questions. I don't see any noise in the chat window here. I'm assuming you're all hearing me, listening to me. I hope I'm making a little difference to each one of you attending this webinar. Just quickly reiterating today's topic is Law Society bookkeeping compliances. It's accredited for 1 hour of CPD credits. I hope you're all enjoying this webinar with me today. If you have any questions, please feel free to use the chat window at any time. I will definitely address the questions towards the end of the session. Awesome. Thank you so much. And okay, so proceeding with remaining slides here, which talks about other compliance documents. So I'm sure that we all have used the set of compliance documents on a regular basis. And one of it is definitely fee book and electronic fund transfers and deposit slips like you see here. There are a set of examples at the bottom of the screen. To talk about Form 9A, it's something that is required by Ontario jurisdiction. So if you're from Ontario and if you are someone who operates trust and if you're someone who uses trust to general transfer electronically, this is for you guys. Please wake up in case this is something you've all not been using in the past. I request all of you to go and generate these electronic fund transfer requisition forms, which is called Form 9A, for all your trust transfers that you've done electronically for moving the funds from trust to general respectively. So whenever you invoice your client and you have some money sitting in the trust, you can use the money that is sitting in your trust first because they've given you as a retainer, and before you go and ask them for further money, or if the client owes you anything, before you ask them to pay that, if there's any money sitting in the trust, you can hand over the invoice to the client and tell them that, hey, you gave me about $500 into my trust account. Your invoice is, let's say, $626.30, and I'm currently moving $500 that I have in my trust account that you paid in while you retained me into my general account as I've completed the work. You still owe me $126.30, which you can at any time pay into my general account. And of course, that goes as in client payment. But focusing on what is trust transfer is what you're eligible to move from your trustee general. Now here, I'd like to probably mention a point where many of us don't know that you can actually transfer a portion of the amount of what is there in the trust account. Your invoice could be for $300, and you might have only $200 sitting in trust, and but you know what, some people would wait for $100 to also come into trust and then move all the $300. That's not really necessary, right? Because the point here is you only can move what is there in your trust, so move only the $200, and I always ask your client to pay the other $100 into the general because you've already raised an invoice, so you don't have any further obligation to bring it into trust since you've completed the work. So that is just like a tip I wanted to give for this trust transfer. But coming back to the point about Form 9A is something that you generate when you are doing electronic fund transfer from trust to the general. Now, besides that, we have other documents such as cash deposits that, comes into your trust, has to be deposited into your bank within the 24 hours. I'm sure many of you know this and many of you have been doing this. So just try and follow this rule, guys. Make sure that you are able to you are able to deposit rather the money into the bank within the 24 hours. Then you get it into cash. Otherwise, I would just say get the money into your I just have someone asking on the chat if this is a professional or a substantiate. This is a professional CPD credits. It's 1 hour of professional CPD, Carla. Thank you. Yeah. So continuing is about cash deposits. So a simple rule about cash deposits is if you get the cash in hand, which is a retainer, and you want to put it into your trust account, try and do it within the 24 hours. Only then you please get it into the cash. Otherwise, I would just recommend you to get it into your general account. All right. And moving further, it is about your cash receipt journals will also show you all the details that you are recording into your cash account. So the cash deposit slip is different from the cash receipt journal. So make sure to please record the transactions with all the details, and you'll have the following samples at the bottom as you see here. Form 9A, deposit slips, client ID verification is at the beginning of the file when you're verifying the client's ID. And of course, if you're making any duplicate cash receipts, you could also have to use the specified format as you see here. Now again, like I said, if you're not doing something manually, these are all there available in the program for you in uLaw, and they're all available literally in one-click button options. So please do ensure that you're using this. And yeah, proceeding, that is about other documents, but proceeding to one of the most important segments of today's webinar. So how much time are you all really spending managing all this? I just hope you spend as minimum time as possible, because that's the whole point of having a very seamless accounting to bring your legal practice together. Because, you know, end of the day, you're all not accountants, you're lawyers or paralegals. I just feel bad when somebody says, hey, I spend more time accounting than actually doing my legal work. I'm like, okay, then you should probably also get an accounting certificate done, right? Just kidding. So trust me, you know, all that we spoke in the last 40 to 50 minutes, it'll come so handy for you, even if today you go back and start doing what we discussed. You know, recording the minutest of information, such as the method of payments, the source of funds, the date, the right amount, and it goes into the respective journals. Because when you are using a double entry, every entry that goes into it is definitely maintained, and it touches the records that it has to, like, you know, there's a touch point for each of these. Like, it goes into the journals, the respective ledgers, then it goes into the reconciliation documents or fee books or every other document that we discussed in the last few minutes. And sometimes it could ask for more information. Sometimes it could be just the basic information that you have to record, but most of the times, you know, you are giving the program a lot of information. So make sure that you are not making any mistakes with that. So only then there is a seamless accounting. Because let's say you by mistake added a transaction into a different month or a different year altogether, it's going to take you so much time to go and identify, first of all, where you have entered this transaction, which date, which year, and, you know, even a small error could eat up so much of your time. So when you add a transaction, if you pay attention closely to it and enter it with all the details possible, you can pull up these documents in a jiffy, literally. So make sure you are, used to matter management, you understand the workflow. When a client pays you, you go into the trust or general respectively and record these account amounts and the dates and the method of payment. So, you're able to pull up these without any errors and make the reconciliation task more simple, right? Because end of the day, reconciliation is nothing but whatever data you've recorded at the beginning of the month or, even before. Maybe if you're doing reconciliation for the previous month and you're here in this month, currently you're trying to do something for December, you're trying to recollect something that has happened in December. And honestly, if you ask me, guys, I cannot remember what I did on 4th of December today. So just to make sure, giving you all a heads up, try and use your accounting system on a daily basis so that you are not having to spend a chunk of time end of the month just before the Law Society date comes to close, right? The 21st of Jan, you all have to produce the reconciliation report. Why do you wait till 24th night, 11:55? Just try and get it done as early as possible, because you all have the bank statements out by first week at the maximum. And again, if you're using software like uLaw, you can connect your bank and the bank statements are readily available for you every single minute. So just connect your banks, get your reconciliation up to date. If you ask me, honestly, by 10th of the month, you should have reconciled your previous month, and that is going to be so helpful for you when it comes to maintaining your reconciliation and your compliance documents for the Law Society. Takes off too much of your mind. So yeah, try it out, and I'm sure you'll all have a huge difference. So that is what I wanted to share as part of how much time you're all spending. So I'm sure if you spend a little time every day making your own ledgers and journals, or at least adding transactions if you're using a practice management system, will automatically generate these documents for you, and the accounting is so seamless. You'll actually thank me later for this. And benefits very well for all the last 50 minutes or 45 minutes of talking that I've done. We definitely have to get to this point where, what is the benefit of using a software? Why not do it manually? Why not just, I'm sure by this point in time, you all would agree with me that using an accounting software, using a legal accounting software is much simpler and hassle-free. You're able to record the event, then and there it happens, right? And you're also able to record everything at par with your financial data, with your financial records, with your bank statements, and as close as possible you can, with the reference numbers, with the method of payment, with the date and amount, who paid you, etc. Finally, it boils down to this point. The 4 steps that you see here, or 4 points you see here: compliance, accountability, analytics, and ease of use. Compliance is all it, guys. You're compliant, you're good. You're able to account for it, you're good. You're able to analyze what is happening in your practice, what is happening in your firm, good. You're able to use it easily, or you're able to manage your practice without any hassle, good. So check. You're all good end of the day. If this is what you're getting out of the software you paid for, or you're looking to pay for at least, then I think there's nothing beyond it, right? So what are you waiting for? In case you guys are not using uLaw yet, please sign up for the 30-day free trial, and my team will help with scheduling your demos, etc. Now, if you all have friends who are looking for a software, you could also do this. Go and register for the 30-day free trial. Now, quickly to showcase to all of you, since we're left with 10 minutes here, I just want to take this opportunity to show you what is available in the program. So I'm sure you all know, if uLaw users, non-uLaw users, contacts typically is where you start off adding your client's information. And when you add your client, just randomly start making entries into it, and you could just go into the matter, make dockets. Like we were talking about the compliance documents. So now, Gayatri, where does this come from? If you are talking about matters, but the compliance is in accounts, how does these two link? End of the day, the matters has it all. It has trust and general respectively. Whatever you add in for a matter from the trust, let's say, this is where the journals, the ledgers, everything gets built. If you're adding a deposit into trust, remember I said you have to enter the purpose of funds, whether it's a retainer or whether it's a settlement payment or if it's a mortgage, any other payment deposit. Let's say this is a mortgage, you're getting a $500,000 into trust, it was from the bank, so it was an electronic fund transfer. The method of payment, the reference numbers, everything that we spoke about is coming up here one by one. If you see the minute details, it's today's 13th. Did I receive it today? No, I received it on 9th. So please go ahead and use it. Use the appropriate date, use appropriate or use accurate amounts. Use the method of payment, use the check number or the draft number or an electronic fund transfer reference number. And what is the purpose of this fund? Please describe it. It comes up in your journals and as a purpose of funds, mortgage funds. And I've received it into my pool trust account and received from CIBC, because it's a mortgage that came in from the bank. And in this very next day, it got transferred to the vendor for purchasing this particular property. So I'm withdrawing it from trust, and there's not everything from that $500,000 went out, but at least what has to go in went out. What has to go out to the vendor goes out of other payout from trust. And again, I'm giving a check from here. So here again, you're saying closing funds to vendor. Okay, and paid to, let's say this was something to do with ABC Realty. And you can also print check from uLaw. So I'll just keep it simple now. Just want to show you how the journal and then ledger works. So I've added a deposit into trust. I've withdrawn from trust. Now I also want to do something in the journal, which is general, which is the disbursement journal. So I go to add new disbursement and I add a disbursement from general, which is an actual disbursement. Let's say I added a land transfer tax. So I'm adding a land transfer tax and it's about $7,500. It's tax exempt, of course. And minute details, again, I'm paying it to Ontario, some municipality, corporation, whatever. Just say whoever you're entering it to or paying it to. Again, if this is a check, please enter the check number and save it. Now here, so far, we've done 3 entries. We have a receipt, which is the trust receipt. Then we had a disbursement from the general. Then we also withdrew money from the trust. Now, let's say I want to add some money as a legal fee. So I go into the legal fee and let's say I put in about $1,000 as legal fee and add it to the matter and save it. Now I raise an invoice. When I raise an invoice, you can actually see how I can transfer the money from trust to general for the amount that I spent from general, which is the $7,500. And the other thing you can see is the journals and the, and the ledgers. And one other document you're going to see is the Form 9A, for the money I have transferred from the trust to the general for that $7,500. So how many documents are you going to see here? Document 1 is ledger, document 2 is journal, and document 3 is Form 9. Okay, so you have to go back in here click on question mark, and let's first do the transfer. Okay, so you do the transfer in the bank for the legal fees and the disbursement of 7,500. Then you can come back into uLaw and transfer exactly. So you see, I'm not clicking on this top box here because I'm not transferring for all of it. I'm only transferring for my legal fee and my land transfer tax. Okay, and then you can click on electronic fund transfer, and let's say the reference number was given and you transfer. The moment I did that, uLaw prompted Form 9A download. So I immediately downloaded, and my one major document that I need for complaints, the other complaints documents that we saw, is already here in a jiffy. Okay, with all the details, the requisition number, what I transferred it for, who did I transfer, which financial institution, the date, and other details. Going back in here, let me go to accounts and show you how I can do the monthly compliance, the client's trust and the client's general, the two top ledgers that we were talking about. Let's just take today's date, and even further drill down. I want to do it for the client Adam, right? We just added it to Adam's account. So just say Adam's account, and we can do show only also. If you do show only, you can see very clearly that this client paid you 400 and this is an account where you can get the money into trust, so you can very clearly see whatever money that came into trust, what was remaining in trust, what was transferred from trust, right? This is for the legal invoice, and this is for the the money that was sent out of the trust. So you're left out with so much balance in the trust. Now, if you go into client's general, and again today's date, and not do all clients, just do Adam's account, and you will now see into client's general what all happened today's date. You raised an invoice for your legal fee, for the disbursement, and you've also transferred the money from trust to the general respectively. So the debits and the credits match totally. Okay. And showing you what happened in the general disbursement, again for today's date, if I could just show you what happened in the general disbursement, you can see that the 7,500 land transfer tax is already here. For the details such as date, the method of payment, who it was paid to, the description, which has also the file number, and the expense that was made. As simple as that. Right? So there was nothing into the client's general receipt. If you go in here, if you take today's, so this will show you the amount that came into the general account as a trust transfer from trust to the general. So the top 6 documents that we were talking about, client's trust, client's general, the trust 4 journals, which is trust receipt journal, trust disbursement journal, general disbursement journal, and general receipt journal. So there are 2 receipts journals and 2 disbursements journals. So you get to see all of them here. And the client's trust payments obviously will show you the trust transfer that was made from trust to general for 8,500 and the $480,000 that went out from the trust account to pay to the party, which is closing funds from vendor. So the information that you're getting here is exactly what Law Society wants to see in your records, and whatever we discussed regarding the details that you need to go into it is all absolutely important. I request you all to try this at your end and let me know if you all have any questions. So we are left out with 3 more minutes. All of you, please let me know if you have any questions. If you want to see any further more documents in here, I'd be happy to show you all, and we can go from there. So thank you all once again for joining in for today's webinar. I'm keeping the chat window open, and I request all of you to make a note of the topic for today's webinar is Law Society Bookkeeping Compliance. Please go into your respective law portals, Law Society portals, and you can claim your 1 hour of professionalism CPD credits. Thank you all for joining in, and the webinar has been recorded, And just to keep the recording short, I will stop the recording right here. It will be available for you all as early as Monday on our YouTube channel. Thank you. Thank you all for joining in.